sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far, and it has been a generally very good session because the broader markets are rocking. We're coming to you from the CNBC-TV18 Motilal Oswal Studios. This is the last hour on Closing Bell. I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, hi, good afternoon.
Good afternoon, guys. And actually, even for the large caps, it's not such a bad place to be in, right? Because the dips are getting bought, and the Nifty, for what it's worth, is still managing about an 80-point up move.
Well, that's right. Par for the course, I guess. A day of consolidation with an upward bias. I think the bulls will like that, right?
Oh, absolutely. And I think, there is... People may want the market to do whatever, but the market will do what it wants to do. I mean, pause, consolidation, well, nothing of the sort so far, right? Today especially, it looked like maybe at some point, maybe right at the word go, it could be a bit soft, flat, but then things will pick up, and that's how it's kind of broadly panned out. But it's not large caps today which are doing the heavy lifting or, what is really leading to the shine here. It's mid caps and small caps. Both those indices are up 1% each the last I checked. So that's, the big one. And I think it's a very large volume day once again for the broader markets. The number of stocks which are going up on tremendous volumes. It's a really long list once again. And we'll talk about some of these specifics in a bit. 2:1 advanced decline. So it's not wild out there, but fairly decent. PSUs are leading, all kinds of PSU names. Nigel has been talking about railways, but it's a whole cohort there, which we will again discuss. Real estate and auto sectorally are the other two areas, pockets really, which are leading. I mean, this is, of course, sectorally speaking. But otherwise, it's a pretty vibrant screen out there that we're reporting this Tuesday afternoon, I beg your pardon. Surabhi.
I like how you think. If only we could fast forward, right? But no, one step at a time, so we have to play it by the ear. Okay, let's talk about the vibrancy in the broader market. So a lot of the PSUs came back, like Prashant's been saying. And just some examples. If we look at the moves again, Aircon, NBCC, it's the usual suspects, RailTel, all these stocks are flying between 7, 8, 9%. In some cases, it's sort of a double-digit gain that we're talking about. Some of the private sector companies which also have exposure to government sectors like railways, they're doing well. Texmaco Rail, for instance, 7.5% on the upside. Some of the Tier 2 financials, Tier 2 NBFCs are doing well. Some of them are housing finance, because that's obviously a big focus area. But even beyond that, I mean, something like a Home First Finance moving higher. HCC, at least for me, has been the stock of the day because of this whole talk about perhaps a turnaround in the making. Elara put this note out. The entire market's taken note of it. And that stock has just not looked back, 17 to 18% higher on the back of that Elara note. We'll, of course, discuss that as well. So all in all, I mean, it's a buoyant screen. And you've got a lot of large caps leading. I think the only sort of missing piece is, large private financials, because Bank Nifty was struggling. But at least even that, for the time being, it's in the green.
Well, there are a lot of stocks, actually cash market stocks, that are seeing a good amount of buying. Nava Limited, that stock didn't move for quite a bit. I think for a few months or so, we had highlighted here in our morning chart itself that was seeing some good amount of delivery-based buying. Today, the stock is up close to around 10%. You pull up the last month-to-day chart, actually, the stock is up 25% in just a single month after not doing anything for multiple months. So, that one has moved up 30% actually in the last 1 month or so. You're looking at the valuations, that one is less than 10 times. It's trailing earnings, and now they're debt-free. So maybe, in fact, it'll be a little bit cheaper. So that's one stock. Imfa, that's the other cash market stock. Remember, metal stocks are actually lower. Hindustan Copper and the likes, they're down 2% from the day's high as well. But Imfa, Indian Metal and Ferroalloys, well, that stock is higher in today's trading session with a gain of around 15%. Appears there's some serious volumes on that one. A few more notable movers in trade, as should be mentioned, HCC, 17.5% higher. And just one more name, Z. I think you should keep an eye on this stock. There's some bit of unwinding that we're seeing of positions in today's trading session. And in all probability, that could possibly come out of the F&O ban. So Z is a stock that I'll be tracking from tomorrow on. But just keep an eye on that one. I was looking at the MWPL, which is the market-wide position limits, and that it appears that there's a possibility that it comes out of the ban. So that's the one that we should be tracking. Well, let's get in our expert on the show to tell us how do you trade from here on with the Nifty up close to around 80 points. Mitesh is back with us to help us out with the trade. Hi, Mitesh. Good afternoon. Well, a good day, right? Mid caps doing very, very well, but the headline index is still up close to around 80 points. What are the levels you're looking at on the upside, and where does support come in at?
So, Najin, the upside level remains. I think, today also we got a high of 23,389 and hourly close of around 23,360, 50 levels. I think I'm still waiting for the 23,390 to be cleared. Once that happens, good chance that we'll clear 23,500 as well and head towards higher levels. So the market breadth, the undercurrent remains on the positive side, and therefore trading should be done only on the long side. On stock specific basis, I have a buy on HCL Tech with today's low as the stop loss. So 1415 is your stop loss. Look for targets of around 1480, 1490 on the upside to begin with, and then we can eventually look at higher levels. And that apart, IEX is something which is showing signs of a breakout. The earlier highs for the stock, if you look at the weekly closing which we got in December, was around 165 odd. And now the stock is trading above that. So keep a stop below 165, 164, 164 half could be good. And look at targets of 180 to begin.
Okay. All right. Got it. Mitesh, thanks very much for those trades. We'll come back to you in a bit for some more ideas. For now, let's say hi to Sudeep Bandyopadhyay. He's, of course, from IndiTrade Capital. Sudeep, great to have you on the show as always. The stock that I want to start off with is actually HCC. It seems to have found itself in the perfect mix. It's the perfect confluence, right? Here comes a brokerage note saying there's a turnaround in the company, the financials will get better. And you're in a market which is, again, looking for infrastructure-based ideas, right? The economy-facing stocks, which is exactly where HCC has always operated. Your sense on the kind of excitement on the stock, is it warranted? Is it a bit too premature? How would you look at this old titan?
Definitely warranted, Surbi. I think we were kind of market by and large was ignoring. The focus was completely on Ultratech and Abuja. They somehow, though coming from the same stable and, sharing a lot of things, ACC was a bit neglected. And yes, it deserves a better valuation considering what the others, similar companies are getting. And of course, your other point remains very valid. There is going to be an infrastructure push. We had a fantastic infrastructure led growth over the last 5 years. And with the continuation of the government, by and large, the policies are also likely to be same. Under the circumstances, demand for cement is expected to be buoyant with SEC benefiting. Now, my view is that, while the cement demand is strong, we may see a bit of weakening during the monsoons, which we are heading into now. We may see dip here and there, but the fact remains that ACC is a well-established company with capacities across the country. Now, companies having capacities across the country will definitely benefit. Even if in one pocket or one area there is a challenge, because of their spread, because of their the kind of coverage they have, they will benefit. So ACC definitely is worth a look under the current circumstances. Of course, my favorite continues to remain Ultratech, and I still believe that Ultratech is also definitely a good buy for a long-term investor.
Okay, all right. Well, hi Sudeep, good afternoon. A couple of other EPC players like a Vascon Engineering now has moved to the high point of the day, up close to around 8% or thereabouts. That as well as one of the top volume movers in today's trading session. I'm not sure whether you track that one, Sudeep, one of the big underperformers in the last few years. If you want, you can comment on that. But also give us an input on Praj Industries. I think last 7 days, the stock is up more than 20%. We had the minister earlier today said that blending has already reached 15%. A few months ago, they were talking about 11-12%. So it's already hit that 15% mark. And going ahead, ethanol blending is likely to go to 20%. So a quick comment on both these names, if at all.
Well, I think Praj, definitely the story is of ethanol blending. And remember, Praj, apart from India, they have been reaching out to global markets and they have a global presence as well. And I think this is a spot where they are uniquely positioned to benefit out of this incremental ethanol blending limits, which the government has granted. And that has changed structurally sugar industry, but that also has structurally benefited Praj Industries. So Praj definitely is a good long-term play. As far as Vascon is concerned, and a lot of other these mid-sized and small engineering and infrastructure-related companies are concerned, I think the good times are expected. I've been looking at another stock, Patel Engineering, again focus on irrigation, water, and the current government's focus is definitely going to be lot of emphasis and spend on these areas. So some of these niche engineering companies will benefit big time. One needs to get into the specifics, their balance sheet strength and track record, of course, before buying into these stocks. But by and large, the sector does look good.
Okay. Yeah, absolutely. Focus very much remains on manufacturing, on engineering, on capex. Clearly, that hasn't gone away. So, Deep, in fact, we want to ask you about the PSUs, the poster boys and poster girls of this entire capex story, right? Give us a moment, because we'll also play out the sound bites that we got from New Delhi. All the ministers were taking charge. Of course, many of them just simply continuing from Modi 2.0. And then there were some new names as well, taking on new leadership in different ministries. So, yeah, there you go. Okay, that's a great graphic that we have going. So these were visuals we picked up throughout the course of the day. You can see the morning started. I think Mr. Jaishankar was first off the block. He was up in his office at around 8:15 itself. And Ashwini Vaishnav there, of course, taking charge of several key ministries. And railways, of course, is one of them. Manohar Lal Khattar, JP Nadda for health, Arjun Ram Meghwal, and of course, Jyotiraditya Scindia, who now in this particular Modi 3.0 edition is going to be heading telecom. So lots of action in New Delhi coming through. In fact, I think we have some sound bites as well, perhaps, of these ministers that we can play for you. Let's hear them out.
Looking ahead, definitely, I think the two axioms that the Prime Minister has given us, Bharat First and Vasudhaiva Kutumbakam, these will be the two guiding axioms of the Indian foreign policy. So, and together, we are very confident it will position us as Vishwabandhu, a country which is in a very turbulent world, in a very divided world, a world of conflicts and tensions. It would actually position us as a country which is trusted by many, whose prestige and influence will grow, whose interests will be advanced, and I once again deem it an enormous honor to be assigned the responsibility of leading this ministry.
It's indeed my honor that the Prime Minister has given me the responsibility of the Communications Ministry, have a tremendous role to play on a global stage as well as on a local stage, to enjoin the hearts of millions of people across our country and across the world. Under his leadership, there has been a revolution in this department. And on this day, I vow to persevere and put in my best to ensure that we deliver.
Refinery and Petchem, BPCL is in an advanced state to set up greenfield refineries, and GAIL is also planning an ethane cracker unit for petrochemicals. BPCL's Bina refinery is coming up, and Cauvery Basin refinery is also coming up by IOCL at Chennai. Answer is categorically koshish hogi. No, hold on. I am giving you my philosophical approach. I mean, as the line minister. You say koshish hogi means you try. I said yes, we will try. Yeah. Both MOS and I will both work on it. On E&P, which is my primary focus area, rounds 9 and 10 of the OALP bidding round will be done in the next few weeks. Now, I've asked my colleagues, and we mean that seriously, next few weeks, few can be 2, 3, but it cannot be more than that. It can be a little more, but not much more. Oil production from the 98/2 well will increase to 45,000 barrels per day very soon, and gas production will also start soon. The green hydrogen refinery, Panipat, 10 KTA, Mathura 5 KTA, and Paradeep refinery of 10 KTA plants will be installed by IOC soon.
Okay, that was Mr. Puri, off the ground straight away on day one, off the mark on day one. So lots of excitement in New Delhi as all the ministers take charge. Just coming back to the question now, so the PSUs. Now, the CPSE index, after all of this, actually, it's still off about 6.5% from the all-time high. The PSC index, that's off about 7.5% from the all-time high. What do you do? I mean, if you have the stocks in your portfolio, I don't think there's much to be done. You just enjoy the ride. But for those who sold off or who didn't take exposure, what should they be doing?
I think there is still some juice and some excitement left in the entire PSU basket. One particular area I definitely like to flag off from an investor's point of view is the power sector. I think there is paradigm shift happening in this space. We had thermal and hydro, and now we have this entire green energy basket, and lots of work is going on. The transition is happening. While the transition is happening, power demand has gone up astronomically. The entire country has been electrified. The use of gadgets, requirement of power has significantly increased. Because of all this, I think the benefit to the power companies will accrue over a period of time. Pretty much all the sector participants will benefit. But I would like to pick a company like an NTPC. I think while it was a traditional energy company, it is transitioning beautifully into a green energy company as well. Maybe there is an IPO in the offing for the green energy business or things like that. But overall, I think the business is shaping up beautifully. And even at current level, if somebody is having a slightly longer term horizon, it's a fantastic buy. The other sector I would like to flag is defense, and particularly defense electronics. Now, while Make in India for defense has been made the fulcrum of the policy for the government, and it's going to continue with pretty much the same setup continuing, the defense electronics is gaining more and more importance in modern warfare. And that's the reason I would say, please look at Bharat Electronics, BEL. It has gone up. It has given fantastic returns. It has done whatever it had to do. But there is much excitement left in defense electronics. And maybe buying Bharat Electronics, even at current level, for a long-term investor makes tremendous sense.
Got that. Sudeep, any thoughts on, if you can pull up Kaynes Technologies? We had the management with us in the morning. Stock, when we were speaking with them, was actually absolutely flat. Nothing at all. And it's been a slow creep up higher. Now it's up at a full 10%, 3,700 plus on Kaynes. Now, there wasn't very much new information the management shared with us. The only thing they said, and this is of course what they feel, that the government approval for the OSAT, the semiconductor business, in terms of OSAT and PCBs, that should come, they said, in the next couple of weeks. There was delay because of model code of conduct. And then they will kind of start to operationalize, build this out and commercialize this by FY26. So that's it. I mean, apart from that, they kind of reiterated some of the guidances they've set for 25, the long-term revenue growth guidance of $1 billion for FY28. But, stocks rising. And it's not as if, all other names are also, it's not a sector move. Look at Dixon, look at Amber, look at, a few other names as well. So there is a move here, though. Sudeep, any thoughts in terms of what you like in this space?
Well, I think this entire EMS space has a lot of excitement, I think, and the valuations are, of course, gone through the roof. I see reports where FY28 figures are being discounted. While undoubtedly the potential for this segment is significant in this entire electronics manufacturing arena, I'm a little skeptical about the valuations which they are currently enjoying. Whole lot of things are being factored in already, and the margin of error at this kind of valuation is very, very limited. So I will be a little cautious. I'm not saying they're not doing good. They're doing good, and they will continue to do good. But the valuation is not very comfortable at this stage.
Okay, that's Kaynes stock, of course, doing extremely well today. Let's take a look at some more movers in the mix. We've discussed, of course, some of the railway stocks. Nigel was pointing out Nava, which is looking extremely buoyant. These are some of the major ones that are catching the eye.
Even RailTel, that stock is up now up close to around 10%. Yeah. When we spoke to them earlier today, they were sounding quite optimistic in terms of growth as well. To run you through a couple of comments would be what they said. They said there's tremendous scope because the total potential is around 1 lakh crore in terms of signaling systems, which will be implemented by the railways in the next few years. And for this year, in the near term, they're guiding for 30% growth with margins around 16%. And there's going to be a big scope with regard to exports, they believe. In the years to come, it'll be 10% of their mix. So put all that together, the stock was excited. When I was doing the interview earlier today, it was around 400 rupees. So clearly, just pull up the intraday chart. You'll see now it's popped up a little bit. Sudeep, if you want to comment on this one, RailTel, the stock is up close to around 10%. Some of these stocks actually were very nervous whether or not there's going to be continuity in the railway ministry. Will it go to one of the allies? That didn't happen. So maybe that's one of the reasons as well. Your take?
I think absolutely right, Nigel. I think the entire nervousness was around whether the ministry will remain with the BJP or it will go to one of the allies. Once that got settled, I think the market is cheering and the counters are also excited. That's the reason. Pretty much the continuation of the existing policies and existing programs and plans will be there, and that enthuses the investors in these segments. Having said that, I'm a little skeptical and I'm a little worried on the valuations which most of the companies in this sector, at least the popular companies in this sector, has reached. So I'll wait and watch. Maybe I'll miss the bus or a part of the journey, but I will wait and watch definitely whether it's the wagon companies or whether it's the the RailTels or the IRFCs of the world.
Okay, all right. Sudeep, good having you on the show. Good chat as always. Thank you very much for joining in today and giving us your take on the market. The market, which continues to be fairly buoyant, still looking at about a 63-point up move on the Nifty. It's not exactly building. We're not talking about the highest point of the day, but it's retaining, at least for now, it's retaining a bulk of that gain. Just the watch area is banks. And for whatever reason, while the market seems to be very gung-ho on capex, on manufacturing, on Make in India, so on and so forth, it's not buying the banks, which perhaps are expected to fund a lot of that. Maybe it's a more tactical issue with FPI ownership, etc. But anyway, that's the Nifty Bank continues to struggle, and it's right now dipping into negative once again. Let's take a break. On that note, you've got the banking constituents there as well. Let's take that break. We'll come back on the other side and keep the conversation going. Amit Gupta of ICICI Securities PMS will be with us. Welcome back. Let's focus on some more stocks. We've got Sonal now joining in. She's looking at ONGC. Sonal, there's a note from Jefferies, I believe. What are they saying?
Well, they say that now it's a good time to buy ONGC because there was a big correction in the stock that we saw last week, and they call it a good buying opportunity. They say the valuations for ONGC are favorable, with it trading at a steep 68% discount to Nifty, and this is compared to long-term average of around 50% discount that the stock is always traded at. They expect this discount to narrow as ONGC's profitability outlook is superior to past decade. They like the fact that there is government continuity, which would mean policy continuity as well. The production growth outlook is healthy over the next 2 financial years, and it is also favorable in terms of valuations if we compare it to global oil and gas majors and the oil producers as well. It trades at 25% discount to the global average as well. So valuations continue to be supportive for ONGC as a stock. Government continuity should ensure continuity of pricing policy, and this has allowed ONGC higher realizations as well. It has been realizing around $75 per barrel on its crude realizations in the nomination field, and new crude from KG Basin that should also add to production and also add to profitability as well. And it is excluded from the purview of special additional excise duty. Reforms in gas should also aid higher profitability. We have seen some pricing mechanism come by for gas in the last couple of months. So policy continuity is something that they like, which is supported by valuations as well now.
Okay, Sonal, thanks very much for that. ONGC, of course, doing well, about 6% higher. Now, let's talk about the other decision, right? The cabinet yesterday, in its first decision, really approved the financial assistance to construct 3 crore houses in rural and urban India. Sources have told CNBC-TV18 that the centre could spend close to rupees 4 lakh crores on this over the next 5 years. Sources also say that a middle-class housing scheme for the poor may also come up for a cabinet nod. Sapna is here with more details on this. Sapna, good afternoon.
Hi. So very clearly over the next 5 odd years, and these are very back of the envelope approximations as of now, so to speak, but more or less kosher. So around 3.75 to around 4 lakh crore, lakh crore odd is what the estimate is as far as the costing for the additional 3 crore house construction is concerned under PMAY. If you look at the Grameen part of it, so 2 crore houses well defined over there in terms of the numbers, and that estimate is around 2.5 lakh crores over the next 5 years. I'm talking in terms of the expenditure. And mind you, this is only with the central government because it's a centrally sponsored scheme. 60-40 is the spend ratio between the center and the states. So this 60% that we're talking about is the center's share, and that's somewhere around at 3.75 to 4 lakh crore odd rupees over the next 5 odd years. However, let's also keep in mind that in the current year's budget itself, Pradhan Mantri Awas Yojana has got an 80,000 crore odd allocation. Plus, if you look at the Grameen housing, there is a separate allocation for that as well. So if you put both the numbers together, somewhere around 20% of this approximate 3.75 to 4 lakh crore odd, I think has already been taken care of. However, the additional sums that we are talking about are quite substantive, and there may be a possibility that some kind of additional funding may be required. So that's something that the center will take care of. That's one. Second, we also give to understand that since we are also talking about urban houses being constructed in this 3 crore number, so the middle class housing scheme that was already announced by the finance minister in her interim budget, the expenditure part of that will already be included in this. However, the scheme is likely to come up for a separate cabinet note.
Sapna, thanks very much for that. By the way, do we know, Sapna, how this is going to be administered, the scheme? Is it going to be through giving an interest subvention? Do we know the mechanics of it?
Yeah, for the middle class housing, is that what you're asking? Yes, I mean, interest rate subvention is how it's going to work. We had done some detailing over the last 2 or 3 odd months. Don't really recollect the details, but yes, interest rate subvention is definitely on the cards. We just have to wait and watch and see when the cabinet note comes out, because the detailing will only happen there. But as far as the expenditure for that is concerned, since it's part of the PMA by itself, it's a subset. Hence, that expenditure number will be included in this approximation that we're talking about of 3.75 lakh crore to 4 lakh odd crores over the next 5 years.
All right, Sapna, thanks very much for that. Great to get those details, and of course, we'll get you more when the nod comes in terms of the mechanics and in terms of how exactly this will work. Amit Gupta is with us, Senior Vice President and Fund Manager at ICICI Securities PMS. Amit, good afternoon. Good to have you with us here. So housing, yes, off the block seems to be the big focus area, at least the a large one that we are picking up. What do you make of it? And from a beneficiary point of view, from a listed universe point of view, is it housing finance companies? Where do you see maximum gains come through?
So I think, first of all, along with this particular scheme, going forward, the interest rates also, the trajectory is going to be down. So whenever it happens that interest rates are going to be cut, the NBFCs generally they gain a better ground than the banks. That is what we have seen, because their cost of borrowing actually comes down, and that has an immediate impact actually on the profitability. So I think the housing segment is definitely doing good. Yes, the premium segment was doing much better. As you mentioned about this affordable housing, I think some of the players in the market who are into the finance actually of affordability, I think they may be one of the beneficiary. Possibly LIC Housing Finance, is one stock, I think, which can gather steam actually going forward. We don't have any direct beneficiary in our portfolio right now, but definitely going forward, we may have some kind of rebalancing in the portfolio where we can trim down some of the positions in the banks and move into this NBFC category.
Okay, all right. Hi, Amit. Good afternoon, and good to hear your thoughts. Yeah, that's right. For NBFCs, few things will work. The cost of funding will come down. You have this housing push that's there. You also have an IPO that's around the corner with Bajaj Finance's housing subsidiary getting listed. So there could be an argument that valuations as well could move up a little bit. So we'll have to see how that pans out. But we've taken your note on housing finance companies. Let's talk about a couple of other themes. And the stock of the last week has been Amara Raja. Some kind of political fundamental rub-off out there. On a forward basis, the stock now trades around 20 to 24 times its earnings. How do you approach this name after the big rally? I believe you're still positive.
So I think it's the canvas is huge going forward, because the way the whole industry is shifting towards the electric vehicles, you will see going forward more OEM players coming in and giving orders actually to these companies. So for example, what we saw in the case of Exide, Hyundai and Kia actually they empaneled actually with the Exide Industries. The same thing can happen with Amara Raja also going forward. It has been a good replacement market player, but it is also moving into the two-wheeler segment. And that is what actually they have targeted. So India, the two-wheeler space has started performing of late, which was not performing. I think that is also one of the trigger. And the overall battery market, actually, if you see, it is around $7 billion, and it may be more than double in the coming 7-8 years. And this is where a good CAGR, I think 17-18% of growth is possible in this segment going forward. So I think that is where the stocks like Amar Raja, which was not performing for a long period, so they are coming out, and this is the color of the market. So a market will look into those stocks now after this election scenario getting over, which have not participated much before, but they are coming out. So long-term breakouts where earnings, reversal is going to happen, good order book position going forward. I think those stocks one should have in the portfolio. So we have taken our positions in Amar Raja batteries now.
Okay, so Amara Raja would be a stock in focus. Amit, hi, good afternoon. So if we talk about some of the capex facing names, or, and this is a theme that you've been quite optimistic on in the past as well, capex, manufacturing, industrials. The issue now is, again, we're back to debating valuations, because that dip was so swift. It was a one-day dip, and the stocks have pretty much recovered all of that loss. So again, from a valuation perspective, if you were to look at fresh purchases, and what kind of companies and stocks would you consider now to play these themes?
So I think in the infra space, I think power is definitely one segment which has become a very secular story, because the kind of demand continuously we are looking at. I mean, see the data centers where continuously the power demand is picking up now. We have seen that the manufacturing and then the villages connectivity. So all this has led to the peak power demand actually going beyond 250 gigawatt now. And it is expected it can reach towards 400 gigawatt in another 6-7 years. So the government has allowed now the thermal power capacity expansion, and that is where 80 gigawatt of thermal power is expected by 2030. I think it's a big kick for those companies like BHEL, for example. So BHEL, recently one correction is getting over, and if you see, NTPC also is coming out with a 10 gigawatt of thermal power plant. It's an EPC player, BHEL, for thermal power plant, and they will get benefit out of this. 78,000 crore of order book fresh they got in last financial year, and their order book position, I think, is going to be 1.9 lakh crores now in financial year 25 ending. If you see Adani Power also, the two power plants they gave recently of almost around 7,800 crores. So I think the things are coming better for the company, and not only this, they have diversified the order book. I think this is particularly what we like, because thermal power is picking up, that we understand, but they have also empaneled with in consortium, they have gone with the Titagarh wagon, and that is where Vande Bharat trains, Namo Bharat trains going forward. So this is where they have entered, and I think 15,000 crores they took out actually from that consortium in the first leg. Along with this, they have also moved into the defense space. So they have come out with a special type of guns actually for naval, and they will come out with some more, air guns or possibly tanks or propulsion systems going forward. This will be a next add-on to their order book. So this is where I think the stock, which has already corrected, recovered, I think it will add on further with this, order book conversion into the revenue now going forward. So good space to be in. This is what I feel, rather than getting perturbed that what can happen to the PSU stocks now. I think it looks better, it can gain, and this is where it is part of our top 10 holdings.
Okay, part of your top 10 holdings, got that. The other one, which I think has done phenomenally well for you, Amit, is VATech Vabag, right? I mean, it's been a great last few days, into new highs and surging. I'm just wondering, where have valuations kind of gotten a little too stretched here, or they appear reasonable?
No, I think looking at this particular growth, and in fact, if you compare with the last 5 years or 8 years periods, the stock is just coming back. It had a long lull period because somehow the projects were not getting executed. But what we have noticed now, this compressed biogas, or you talk about green hydrogen, or you talk about semiconductor, everywhere you need a pure water. So this is where the company is moving in now, and I think this project execution is going to be very fast, because even if the government is talking about Nal Se Jal, so you need more municipal parties, this particular part they will attract more clean water solutions, and this is where Vatek Baba is ready. They have a more inclination towards the municipal things, and then to the industrial. So industrial is just picking up, and this is where I think it is in a good set space right now. Bangalore, we have already seen in last few months, there was a scarcity of water in Bangalore. I think that is where the things have to pick up pace now. And this is where I think this company is ready to take this order book position. It is a leading player in this segment. And I think now the canvas is ready for it to perform.
Okay, so those are some of the themes perhaps in the water space. This Nal Se Jal, Har Ghar Jal scheme perhaps also likely to get more continuity. So as we wrap it up, I mean, still all about government policy and stocks that you can look out for. I mean, in the last week, some of these Andhra-based companies did really well. And, Nigel's been telling us, obviously, I guess cement companies, especially in the South region, there's a lot of focus on them for very obvious reasons with the, expectations around Amravati. Would you look at these themes or any other, politics-related themes? It might not be a lifelong portfolio idea, but maybe in the short term where you'd expect that particular stock to do well. Any names?
So cement we don't have in the portfolio currently, because what we didn't like that in the cement, the prices actually were not picking up. And that is where the EBITDA per ton was not able to recover. They are doing the capacity expansion like anything. We feel that almost 1.9 times capacity expansion is possible by 2027 in the cement space. And that is where actually there will remain some pressure on the profitability on the cement prices. So, but if you look at beyond, as you talked about some political front, I think there may be some initiative towards the rural area. There may be some initiative towards the consumer segment also, which was not performing before. And in that segment, when I look back, I think premiumization trend is still picking up very fast. So liquor as one space that we really like. I think United Spirits, which was not showing that kind of bigger growth, I think now it is very much possible. If you look at on the raw material side, ENA, which is extra neutral alcohol, those higher prices were creating some problems on the margins. But now because of their product mix, because they are completely into the premium segment, and that is where I think they are going to compensate that kind of impact. Another thing, because previously we saw that alcohol was getting banned in certain states. But if you see what happened in Uttar Pradesh, we saw that their excise duty jumped from 17,000 crore to almost 50,000 crore because they worked on the architecture of this wholesale and the retail dealers over there. I think this is something the other states also are going to follow, which will benefit both the state governments as well as this particular company. So there in UP, we saw that a single wholesale dealer was converted actually into the 100 wholesale dealers and then 500 retail distributors. And this is where the government earnings also improved. And this is where I think this company roadblock also will go. And I think this is where they can gain further and very fast. If you see the profitability going forward, because this is a leader, Diageo United Spirit is a leader in India. If you have to look in China, what has happened, the largest liquor company in China, it gives a profitability of $10 billion with the market cap of almost close to $300 billion. So I think it's a big spectrum. Every year in India, almost 1 crore new people are coming for drinking. So you can take it as a sin stock, but yes, this is a trend which is picking up in the consumer space. So it's a big space consumer, but this is one particular segment actually, I think, where growth is there.
Amit, I think, companies like United Spirits, definitely, you're talking about $10 billion of profit in China. They give a lot of profits here as well, but I guess also to the government, because taxation is a massive lever, right, on all of these liquor companies, and all the states want their own share. But take your point. Thank you very much. That's an interesting idea, actually. I mean, perhaps look at liquor consumption as well. If there is stimulation of the rural economy, we will remember that, keep that on board. You have a good day. Thank you very much for joining in. We'd have to take a quick break on that note. Come back on the other side. As always, the latest buzz from dealing rooms. We'll have Nimesh with D Street Chatter, and then some final trading calls with Mitesh.
Welcome back. Well, the markets have absolutely flattened out actually in the last few minutes, and the Nifty Bank is the underperformer yet again, moving to the low point of the day. Nimesh joins us to tell us what is he picking up in D Street Chatter. Nimesh, take it away.
Hi Nigel, today is a day of broader markets. That's the space which is relatively outperforming. The index is still up 1% and a lot of individual sectors within the broader markets have done well today. For instance, smaller infra companies have done well, real estate names have done well, and so is the sugar stock. So clearly the focus seems to be on the broader markets and the mid-cap and broader markets today. The sector which has done well and continues to see a lot of buying interest is the PSUs. And the feedback is the way all the ministers have taken charge today itself. There is a renewed confidence as well from large institutions in the select PSU names. So that's one space which is well built by the larger FIs and for that matter mutual funds as well. Yesterday we saw a very large number from the FIs and DIs. But that was because of large blocks. The same is going to be the case today as well. There were 3 large block deals. So again, the institutional data will look skewed towards the FIs and DIs because of those large blocks. But barring PSUs, I've not heard large buying interest from larger FIs. But the momentum clearly seems to be in the broader markets.
Nimesh, in terms of individual names, what's on your list today?
Well, as I said, a lot of broader market stocks have done well. So a lot of stocks today are part of that. The first name is Sun TV. It's almost at 52-week high. Again, buzzing in trade today. The volumes are on the higher side. I understand a leading domestic mutual fund is an active buyer of late. And that's the reason why I've seen a bit of outperformance in Sun TV compared to the other media names. The second stock is JNFC. Again, the PSU basket has done well, but JNFC stands out purely on back of very strong buy flows. To expect high delivery volumes in JNFC in today's trade. And the last is the couple of large block deals. So the trend continues, and that's going to be the trend this week. It's again is what I understand. So some large blocks expected. First one is Kalpataru Power. Again, a large block expected very soon. Same is the case with Vedanta. Investors have been waiting for, and there's been a lot of chat as well in the last many days that there will be large blocks. That is expected this week. And of course, the long pending Indus Tower block as well, where a small stake could be sold from Vodafone PLC. So 3 large block deals, but I guess this trend of PEs and promoter selling is likely to continue.
Oh, absolutely. And we're getting a lot of these big deals. And Nimesh, thank you for keeping us on top of all of that action. So that's the latest coming in from dealing rooms. Let's quickly go back to Mitesh. There's a lot of volatility. The market has sold off, at least at the headline index level. And the bank Nifty continues to drag its feet. Mitesh, what's the advice on index? Anybody who has open index positions, first of all, what's the advice there? And then stocks.
So on the index, as I said, I think, let's certainly get past 23, 380, 390, wait for the dip to play out and then buy. That could be close to about 23, 100, 120, so on. It's the preferred area. But hold on to your long position if you have a good streak and value. My belief is that eventually there's a higher chance of us breaking on the upside. And therefore, taking on the downside is a good idea. If you want to enter fresh, wait for a dip, otherwise buy on a break at about 23,400. That's the very simple way of doing this. On the BTSC side, I have BTSC on Aluminum Finance with a stop at about 289 for targets of 296. And the other one which I like is Maruti, but it's not clear the pivot yet. But I think mild BTSC position with a stop at about 12,820. Once it clears 13,000, you will see a strong movement. So we'll keep the target of 13,000 for the time being.
Okay, well, thanks very much for that. So those are individual trades coming in from Mitesh as well. Let's talk about one more PSU name, LIC, the largest insurer in the country. Now, the data for life insurance companies came out yesterday. We highlighted that as well. But now we have the market share numbers, and this is not just for the 1 month for which we got the data, but over the last 1 year, LIC on an overall basis, individual plus the group insurance business has been gaining share. Yash is standing by with the details on this one. Yash, take it away.
Well, Prashant, one of the points which LIC chairperson in our interview highlighted was that the company intends to gain market share. And this is exactly what the company has been doing, let's say, up to the month of May. The data which we've collected, shows that overall business, which is individual as well as group business, LIC has gained market share of about 636 basis points up to May 2024 versus up to May 2023. The market share at the end of the May stands at about 61.5%. Now, in the same period, the maximum amount of market share has been lost by two players, both listed. SBI Life Insurance, the market share is down about 186 basis points, and HDFC Life, the market share is down by about 159 basis points. Now let's look at individual businesses. First, to speak about the retail or the individual business, LIC market share loss in the same period stands at about 100 basis points. This has been historically much higher, but that has reduced or has been arrested at about 1%. Interestingly, SBI Life is the only player to lose market share in the individual business out of the private category. SBI Life's market share, that stands at a loss of about 21 basis points. In the same period, as far as individual business is concerned, ICICI Prudential Life Insurance has gained market share by about 108 basis points. Let's look at the group business, which is the USP for LIC. LIC's gained market share of about 1,000 basis points or about 10%. The maximum market share loss in the group business in the same period has been posted by first HDFC Life of about 266 basis points contraction, and then by SBI Life of about 232 basis points contraction. So on the group side, of course, LIC is going pretty strong. It will be very interesting to see how LIC increases its market share when it comes to the individual business as well, because that will work as far as improvement of margins for LIC is concerned.
Okay, all right, got it. So still going strong in group and maybe individual segment. Let's see if they can manage a pickup. Thank you for bringing that interesting analysis to our notice, Yash. Well, on that note, back to some market opinion. And in the morning, we were in conversation with Lawrence Belanco of CLSA. Lawrence gave us his market outlook, saying that the recent volatility, election-driven volatility, that's not really altered the longer-term chart structure for the Indian market. Take a look.
End of this decade, we're talking about targets between 30 and 37,000. So that's the longer-term sort of runway that we're looking for the Nifty at the end of the day. But we're talking about these decade-long trends that you've seen in the Nifty from that 2001 low. So, to put into perspective, end of this decade, that's where that 30,000 to 37,000 upside target is based off those trends that we see now. And then the shorter-term side, 21,100 is the 200-day. And on an intraday basis, that's what we got close to on the reaction to the results last week. Just to remain underweight FMCG as well as IT. We've seen a bounce in IT, but if you look at that relative to the Nifty, that's fell below the 200-day, and that still maintains its relative underperformance.
Okay, the market, of course, is sold off starting about 255 or 3 or so, and it's not looking all that great, at least on the frontline indices. But for the broader market, there is give back, but nothing large. If you can have the small cap index, which has been the stronger index, we started at 230 with a 1% gain. I mean, the gains have been cut down in half, and I think something similar is happening on the mid cap screen as well. Which will come up 0.75%, so a little stronger, but mid-caps, of course, were weaker yesterday. Jay Bala is with us of Cash the Chaos. Jay, good to have you with us here. Thank you for your time. From last time that we sort of spoke, very, very different looking screen, Jay, much higher in that sense. What's the prognosis near term for the Nifty, for the Bank Nifty?
Hi, Prashant. Good to be here. The trend for the Indian markets, we have a new trend for the Indian market, which is same as the old trend. The market is trying to push to record highs, and then the market gets repelled. And if you recall from our last conversation, I had said, the markets have broken significant intraday supports, but they haven't. I would like to see a close of the markets on the Friday level, and the markets have rightly, rewarded the patience and not taking any action has rewarded well. If you look at the markets are clocking about 6.5-7% gains for the year. That's nothing compared to a fixed deposit return, and you could have got the same with taking zero risk. And if you adjust for inflation, that's something a very average return. So what you need to do in the markets, you need to maintain patience, and you need to look at markets outside the large cap space the action is taking place outside the large cap space. The large caps can do well if they can consolidate around current levels, probably slightly about 22,600. That will be a good base for the markets to build on. Given the volatility of the markets, it will be good for the markets to go sideways. And if it does that, that will be a good launching pad. But if it were to proceed higher or lower, that may not be sustainable, but it can have an effect on the market.
Okay, Jay, hi, good afternoon. So, but in the meantime, while we're negotiating this range, you're saying that 27,700 is probably seeming like an upper boundary. What's the best way to play? And what should the trades be then if the index is going to remain in this range for a while?
Yeah, look at cash stocks and outside the large cap Nifty. Go to Nifty 500 stocks, and that's not in a derivative space. That might be the best place to play. I have a couple of picks from the Nifty 500 space. One is from the pharma space. Pharmas tend to do generally well around June, and that's the reason I have a pick from pharma space. Wocar, I like Wocar at current levels. And if you recall from a June 2023 call, I had made a call at about 230 for record highs. It's come to the 52-week highs, and it's consolidating around the 490 mark, and it's now rising up. So if you can place a stop at about 495, I think this has potential to scale about 740. Likewise, I like Sasta Sundar Ventures. It's got a huge potential from current levels if the market's going to remain bullish, and very strict stop loss about 284, and a conservative stop at 300 would make sense. And I'm expecting this to raise to about 540, maybe even 750 in the medium term if the markets remain bullish.
Okay, all right. Noted both those two. Sasta Sundar, by the way, is already up close to around 9%. Today, volumes at close to around 4.6 lakh shares. So we'll keep an eye out on that. Jay, give us some levels on metals, both precious as well as copper. What are you looking at on both those two? Gold has come off a little bit from the top.
Yeah, if you recall our May 21st conversation, I had pointed to a 10% drop potential for copper, and that's come through. And the nearest support for copper is about 4.4, the high-grade copper. And when it comes to the precious metals, I was anticipating volatility, but in a bullish sense. So 29 is a very important level for silver, and about 2250 is a very important support for gold. I'm still bullish on it, but if these levels of 2250 and 29 were to break, I'll have to reconsider my bullish objective. I don't think they're going to go much below these levels, but it's coming to a very important support. I'm anticipating higher highs about 2600 for gold and about 34 for silver.
2600 on gold. Okay, that's interesting. Jay, so I mean, that also leads me to the near-term view on yields as well as the dollar, because after the drop now, again, there's a bit of an upward move in the last couple of sessions. We also have the FOMC. So, very near-term, what are the ranges that you're working with on the US 10-year and the dollar, DXY?
Yeah, there is a small possibility that we might have had a false breakdown in the US 10-year yields. 4.3 was a very important level. I was anticipating that to sustain, and then the markets to drop towards 350 first in the short term, and then recover to fresh multi-year highs past the 530 bips that we saw in October last year. So right now I would be a bit watchful, but I would consider the trajectory is downwards as long as the US 10-year yields maintains below 464 bips. When it comes to the dollar index, again, I was anticipating a drop to about 102.5 in a corrective fashion. But if 105.75 gets taken out, we might have a more bullish dollar in the immediate term. So these are the important parameters when it comes to the US 10-year yields and the dollar index.
Oil, Jay, do you have a view? Oil?
Yeah. Again, Brent is exhibiting a similar price structure. Below 81, it's supposed to accelerate much lower. It went down to about 70, mid 70, 77, and then it's come back to the same breakdown level. So watch 85.5. I anticipate that to not get taken out. If 85.5 does get taken out, we are looking at revisit of 92 odds. But I'm anticipating the December lows that we saw about 72 odds to get taken out. But that is subject to condition 85.5 doesn't get taken out in the immediate term.
All right, Jay, got your point. Thank you very much for joining in and sharing that perspective with us. Great talking to you, as always. Well, we're down to the last, I think, 1-2 minutes of today's trading action. It's completely fizzled out, kind of mirroring what happened to the market yesterday. The difference being that a lot of mid-caps still retained their mojo. But at the index level, this was a market that almost was trying to take aim at, 2,380 thereabouts, but then it fizzled out from there. So if you talk about the Nifty, then on the downside of the screen, you've got some pharma names like Divi's, Dr. Reddy's down as well, about not much, 1%, 1.5% thereabouts. Some of the banking names have struggled right from the morning. Kotak Mahindra Bank down 1.3, Axis down about half. So that's pretty much IndusInd Bank also on the losing side. HDFC Bank actually at the flat line, better off than the morning cut that it was looking at. Then you have Titan, Infosys, these are some of the other names, Reliance, all of these big stocks actually pulling the index down with it. So as you can see, the cuts are not very deep. It's just about 0.5% to 1% on most stocks, but it was enough because of the heavyweights. It was enough to pull down the index. On the upside, ONGC up about 6%, massive mover today. Adani Ports 1.5%, and L&T continued its good form, 1.5% higher. Some auto names did well actually. Our auto was probably the star sector. Maruti, Tata Motors, Hero Moto, M&M, all the auto stocks doing really well.
Absolutely, and the old economy and auto, the two areas which did very well, and no help from banks. I mean, the private banks, that is. Actually, the PSU bank index ended marginally higher, but it was green. Private banks down about 0.25%, the index, that is. The home finance companies, Aavas and Home First, stood out with solid gains today. And then, of course, in the broader market, there was a long list of volume-led gains. Linde India, Imfa, Natco, Skipper, Nelco. Dredging Corp is up, I think, about 20-30% in 3 days. That's, I think it was up circuit yesterday. It's up circuit today, Dredging Corp. I think Prakash Diwan was talking about Dredging Corp end of last week, and it's done well. There is, on the downside, of course, the companies where there is block sales, IRB, Indigo, Honasa, they were the three big losers. But there was IIFL, which got to almost $500, which saw a little bit of pullback today, ending down about 3% or so. So that's the overall picture as far as the market is concerned. I think on the Nifty, we'll get the adjusted close in a bit, but we're up 5 points. The provisional close is up 5 for the Nifty, 23,264. It's a wrap on this edition of Closing Bell from all of us here. Goodbye. Thanks for watching, but stay tuned because Markets Forward will prepare you for the coming day. Stay tuned.